Boom.
Hello guys.
So I found out Slav's trick to being the first one in. Whenever we schedule a live event, he puts it on YouTube as soon as we schedule it, and it classes as the first comment. So he actually said this at 9:18. I know his tricks.
But on Facebook you can't do that.
No,
he's normally
on
first
YouTube.
on Facebook as well.
Yeah,
but he's normally first on Facebook as well. So I don't think you figured him out, mate.
I thought I did. No. He's saying, well done. I have clocked him. I have figured it out.
Awesome. So, yes, I know most people are going to be at work now. But we just thought we'd jump on live again. I've been sending out lots of videos. Guys, I don't know if you guys have checked out today's one, but make sure you do. With us speaking about strategy and the importance of focusing on a strategy rather than trying to do too many things. And, so check out that video. Let me know what you think. How's everybody doing? I know we had some questions yesterday. I don't know if I didn't make a note of them, but we didn't quite get to them that we can answer as well. We'll be on for the next few minutes, 15, 20 minutes. So if anybody's here that wants to ask some questions, let us know.
Awesome. Yeah, just pop them in the comments, guys. Make sure you go through the StreamYard link and we can see your names as well. And then we'll jump on any that we have. I guess we can jump straight into it, Andy, just to kind of cover off maybe a couple questions from yesterday. One quite generic but a really, really important question is, what is the best way to handle a losing trade or to just accept it? What's the best way in order to do that?
Yeah, I think that funnily enough, that was a question I also got yesterday personally. So it's obviously a very common one and a common issue that, accepting risk, and it's one of those things that you have to master. Otherwise, you are never going to be successful at trading. So how do you do it? Well, there's a few things. One of the things that you can't do, unfortunately, is eliminate emotion. It's impossible to eliminate emotion because it's just a natural human behavior. But what you can do is you can definitely negate it with certain things. So one of those things is reducing your risk dramatically. So if you really, really tame down your risk, the risk of loss really does go down. And therefore, you're much more likely to let the market just play out as it should, because you don't really mind losing because it's not a lot of money. Okay. Now, that's a good way to do it. Now, one of the sort of counter things to that, where somebody might say, yeah, but the problem is that I want to make a lot of money. And therefore, if I reduce my risk, I'm not going to be making a lot from it. So I'm not motivated. And so because that is the case, you have to find a balance. But it's like, or a motivation, let's say. So a motivation might be, do you know what? If I master my strategy, if I master my numbers, and I know I have a system that's scalable, guess what? I can go and find more capital and trade on low risk, but with more money. And therefore, I will make a lot of money anyway. So then it's a win-win. You're risking lower amounts. And also, if you're risking other people's money, it's also less emotional as well. But when you're risking your own hard-earned money that you spent, hours working for somebody else to earn, and you're sticking it in the account, you that immediate attachment to that money is there, and it's hard to detach yourself, especially if you're putting too much pressure on every trade.
Yeah, I guess when it comes to risk, it's all well and good saying, oh yeah, just kind of reduce your risk dramatically. I guess what a lot of people struggle with is kind of the emotional side, and they don't realize actually the full extent of risk management, so to speak. So like everybody has that concept of, oh yeah, well, if I'm placing a trade, in order for me to manage my risk, I risk, let's say, 1% of my account each time. But then they could go on and take 10, 20 trades throughout the day. But the thing is that still doesn't mean that you're managing your risk properly, because yes, you're placing 1% trades each time, which is great. That's the right way of doing things. But when you're placing 20 of them, your risk is basically 20% every single day. And you've just got to assume, like, what if you lost all 20 of those trades? Well, it means that you're going to be losing 20% of your account in one day. 5 days like that, your account's going to be gone. So I guess it's being able just to manage the emotional side and really just getting an understanding as to actually how do your numbers add up? How much are you risking per trade and how much are you risking kind of per day? And when you then lose a single trade and you know that you've only risked 1 to 2% in that day, it starts to not really become a big deal. It's just following that routine. It's just making sure that you're consistent and you're managing your money on a per trade basis, and also maybe a per day, per week, per month basis as well.
Yeah, it's important that you look at the portfolio risk. Definitely, I agree, and also the correlation as well between the trades that you're taking. Because if you're taking, trades all against the dollar, then if you're wrong on the dollar, then all of your trades will probably lose. So just have that in mind as well when you're taking on that kind of, the risk.
Absolutely. So hopefully that answers that question. We had another one about different indicators and it kind of linking into price action. So we got a question saying, following on price action, would you consider Fibonacci's, volume, and VP? So I assume that's volume profiling, as price action or indicators?
That's a great question. So I would actually say that they are price action related, because they're not a lagging indicator. They're not being created based on historical information. They're being created based on current information. So, and it's all related to price. So yes, I would say those are price action indicators. So Fibonacci I use extensively. It's one of my favorite tools to use. And if you're one of our students, you'll know that it's a big prominent way of how we trade. And obviously we've made it systematic so that we make sure that, everything that we do can be repeated. And then my view on volume is kind of mixed with Forex. And, I think you can certainly use volume. I don't really like the idea of not having all of the data, because obviously, as most of you will know, Forex is not a central exchange. So because the volume comes from different sources, from different banks, different liquidity providers, how trustworthy is it? Well, you're not seeing the whole market. So if you're trading off that information, I'm not sure if I would give it too much weight. There are people that really swear by it and say, it works and you can use volume, and, and if you find an edge with it, then great, you can use it. I just prefer not to use it with Forex, just because, like I said, it's not a central exchange, and I don't really like the idea of trading off, let's say, 50% of the information, because I might be trading off the wrong information. But it's all about testing and finding something that works for you, and making sure that you're comfortable with the strategy that you're using.
Yeah, I guess everybody kind of has their own style, and we always get questions about volume. And like you said, I think it's something that you can use. You just kind of need to take it with a little bit of a pinch of salt, because, like you said, the Forex market is decentralized. You don't have all of that data available. In the Forex market, it is kind of prone to kind of maybe giving you fake signals or incorrect signals when you are looking to take a trade. In the crypto market, however, you're dealing with pretty hard facts. Volume is absolutely fantastic for the likes of cryptocurrencies.
Yes.
But when you're looking at specifically FX trading, finding a really nice balance between price action and indicators, and if you can use indicators that are kind of price action denominated, then absolutely fantastic. So we like Fibonacci. I find the DTR is an absolutely fantastic tool that we use. The likes of pivot points, stuff like that is all related to price action, which we always find really, really effective. So yeah. What do you have anything else that you want to kind of cover at all, Andy? Or
no, I mean, I think we've been answering people's questions. I think, like, the main ones I think that most people are struggling with, I think, is just, I guess, consistency. Like, a lot of people would know how to look at charts and maybe can even make a decent guess as to where the market's going to go, but then they're not able to make consistent profits. And one of the core tips that I would recommend people do is to make sure that you have a good structure with good rules. And you can definitely use a bit of intuition. I think intuition is important. You don't want to be completely rigid, but you definitely need a structure so that your main, let's say, like in an analogy, like your main house is built, the foundations are strong, and then you can kind of use, like I've kind of been saying, other indicators to confirm things. But price action before indicators, and then and that's going to give you the best kind of basis for you to get consistent with this. So yeah, that's kind of really on my side. I don't know if anybody else has got any questions that they want to ask. Whilst we see if there are any more questions.
Yeah, I mean, just to kind of add on to stuff you said about consistency, and in today's topic, you released kind of your next video in the video series of people's trading strategies and kind of how important that is. And I guess we kind of split trading down into 3 core pillars, right? And that's what we want to try and help educate everybody on, because just splintered across all of social media, you always see strategy, right? And promises of 90% win ratios, get $1,000 in the next 30 minutes, whatever it may be. But I think if you're really wanting to go for consistency and really, really be successful in this space, you have to focus on the 3 core pillars. Now, the first one absolutely is strategy. Like you need one in order to be consistent in what you're doing. You need an edge in the market. You need to bump yourself up into that top 5% of traders, right? Doing stuff that not the everyday person does, right?
Correct.
Now, that strategy, a lot of people think that they need that strategy in order to be successful. That is the main thing in order for their path to glory. But actually, it only probably accounts for about 10% of your success. Like, it's relatively easy when you get the right support and the right guidance to come up with a really, really simple strategy. I think where a lot of people end up falling over is based off of the second pillar, risk management, understanding actually how to manage your money safely and how to reduce your losses and maximize your profits, how to actually make your numbers add up. And we say that usually accounts for about 30 to 40% of your success. Now, the remaining 50 to 60% is based off of the psychological side, and that they all kind of interlink. But with the psychological side of trading, it's about routine, it's about consistency, it's about following a set of rules every single day, black or white, or black and white, should I say, and basically installing good habits into yourself. And
yes.
If you can't do that, well, a strategy isn't going to be kind of your blueprint to making six figures every single year. Nailing all three of those are what's going to make you consistent. Strategy is kind of one of your first steps in order to get there. So it's focusing on, like you said, the bigger portfolio, the bigger picture, instead of just focusing on only 10% of what you need.
Yeah, I think it's I think that's one of the hardest things. I think that's why trading is challenging. It's not that it's that difficult, but it's challenging for people because you've got to be able to put all the pieces together and then make them work together. So, you know, having a great strategy, but then not being disciplined or not being emotionally stable, being sort of too desperate to make money doesn't really work. And then vice versa. Even if you've got great emotional, you know, you can handle your discipline, but then you don't have a great strategy or one that makes sense with an edge, then you're not going to make money. So it's like you have to have all of it to be consistent. And then you've got to fit it around your life as well. And that's where the challenges come in. So it's really important that you know, this is what you need to work on. This is what you need to create. And then once that's created, then it becomes seamless because trading just fits around your work and whatever else, and your other obligations. And then it should be, and one thing that, as a kind of sign for people, you know, the thing that you need to look out for is like making money from trading should feel effortless. And if it becomes stressful and it doesn't feel good, you're probably on the wrong path, and you should probably stop and then regroup and then look at it again and look at your strategy again. So yeah, I think that's kind of really all I wanted to say on that. Fantastic. So guys, I don't know if there's any other questions, but if there isn't, the last thing I personally want to say is just, you know, we're going to be doing our live event tomorrow. So make sure that you join us because I'm going to be sharing some really, really cool stuff tomorrow at 8 p.m. So register. There's a link that we'll post. It should be in the description, but post it in the comments as well. And register for the event. There is a max capacity. Make sure you turn up early. We don't run these events very often. And as is traditional, we're going to have a very, very nice product Black Friday special, something completely new that you've never seen before. So you need to be on to check that out. Any other questions, Dan?
No, I don't think so. I think we've covered more or less anything. And for anybody that has questions, like on the replay, or if for some reason we have missed anything, just pop it in the comments anyway, and we'll get back to you either on the comments or individually. And we'll drop you a message or just get back to you on the comments. But yeah, I think everybody should be really excited for the event tomorrow. And I've been saying it to people as well. We've said it on today's event. You need to kind of have your own edge in the market. You need to be doing stuff that 95% of people aren't doing. And I think tomorrow's event is genuinely something I have never seen other people do in this market before. And it's pretty safe to say that, especially for yourself, Andy, and people that are with LTI, we're finding some really, really incredible success with what we're implementing at the moment. And just being able to share, and just being able to share that with people that are interested in taking that next step in trading. And guys, if this is something that you are really, really serious about and are really looking to make a change, I really recommend going ahead, joining on the live event, and even just being introduced to what can be done, changing your perception on the markets and giving you maybe that insider information to bump you up to that top 5%. I think it's an opportunity that can't be missed. And before we do finish, it's kind of going back to why a lot of people don't end up taking part in opportunities like this. And I certainly hear it all the time. You know, it could be, oh, I'm busy, or I don't have time, or I'll do it tomorrow. But the reality is that stuff like this, you know, it's about trying to make that time if you can. And if you don't take action, if you can't even watch the replay, or if you have that I'll do it tomorrow mentality, a lot of the time you just won't get round to it. So for anybody that is super, super serious about really kind of taking this to the next level, I really recommend just clicking on the link, signing up. It's completely free. Sign up, get access to a live event with the wonderful Andy himself, and we can take you through some really, really interesting stuff. That should be the thumbnail for it. We can. Yeah. I don't know if you have any closing thoughts, Andy, but that's everything from my
No, perfectly said. Hopefully, looking forward to it. I know, like you said, we're very busy. We don't often do these kind of events, and I think one of the things that we both said, we want to be doing more live for you guys, especially with everybody that's in the Crypto and FX Traders Club, in our free Facebook group. So that's the plan for the new year, to be jumping on more, to give you guys more value, answer your questions. But yeah, looking forward to tomorrow, and hopefully we'll see you all there.
Fantastic. Thanks, Andy. Thanks everybody.
Take care, guys. Have a good one. See you later. Bye bye.